Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Kickstart video where I take a look at three of the major currency pairs: the euro versus US dollar, dollar versus yen, sterling versus US dollar from a technical perspective. Today's date, new trading day, December 4th, 2024. Let's get started. Looking at the hourly chart of the euro versus US dollar at this time yesterday, the price was moving to the downside in early Asian session. We could not sustain momentum, and we started to see a rotation back to the upside. We need to get it back above the 200-hour moving average. We did hold it right here in the late New York session, not yesterday, but the day before. So moving above that level is more bullish, and you can see the price tried to stay above that moving average and extend toward the 100-hour moving average. However, we could not. There was lots of volatility, and the price started to trade not only below the 200-hour moving average, but on the rebound back to the upside. We did find willing sellers against the 100-hour moving average. We did that in trading the prior day as well, right here and right here. So not getting above that 100-hour moving average kept the sellers more in control. We've since rotated back to the downside. We're currently trading right below the 200-hour moving average at 1.0507 at 1.05064 currently. So the sellers are trying to take a little bit more control on a break back below that level, similar to what we saw in trading yesterday. At this time, if we can stay below that level, then the bias would tilt more to the downside. Admittedly, however, the price action has been up and down over the last few days, actually few weeks. This level right here, I want to bring your attention to. Why? Because in trading yesterday, or not yesterday, the day before, the price low came down to that level. This is the low for the week, and found willing buyers against the high of that swing area. So if the price is going to go lower, we need to ultimately not only stay below 200-hour moving average, but start to move down toward and below this yellow area right here to open up the door for further selling pressure. This 1.0405 level. What does that level correspond to? If I go to the the daily chart, 1.0405 level is the 50% retracement of the move up from the 2022 low to the 2023 high. That 50% again comes in at 1.0405. We did break below it in the month of November. You can see on one single day, but quickly rebounded back to the upside, and then use that level as a support here before moving to the upside. So that is going to be a key level on the downside if the momentum to the downside can continue. Let's take a look at the dollar versus yen next, and we'll look at the 4-hour chart for this currency pair in trading. Yesterday, the price came up to test its broken 38.2% retracement of this move up from the September low to the November high. That 38.2 came in at 150.18, and that's about where the price high stalled at in trading yesterday before it rotated back to the downside. That moved to the downside, came down and fell through its 100-day moving average. Note that the price did hold that level right here, so falling below that level right here should have been more bearish. We also fell below the swing area down here at the 148.88 level, but the momentum could not be established. So with the price falling well short of the 50% retracement level at 148.156, so we've seen a rotation back to the upside, and we are currently back above this swing area here at 149.35. Taking a closer look at the hourly chart, the price action has extended away from its 100-day moving average here above the swing level. On the top side, we have the 38.2, and this falling 100-hour moving average is still well behind at 150.348. We're ultimately going to need to get back above that 100-hour moving average to increase the bullish bias in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. Off the hourly chart and trading yesterday, we saw lots of up and down volatility. That volatility took the price above and below the 100 bar moving averages, both on the hourly chart and on the 4-hour chart. In fact, those two moving averages crisscrossed in the early European session. We moved up above that level. And where did we find sellers? We found sellers right near the 38.2% retracement of the move down from the November high to the November low. That 38.2% retracement came in at 1.2699, a nice round number near the 1.27 level. Found willing sellers against it right here. then fell below both the moving averages here, and looked like it was going to go lower, but couldn't get to the 200-hour moving average, and rotated back to the upside. Where do we stall again? Right at the 38.2% retracement, right at the 1.2700 level. So guess what? The 1.2700 level is going to be a key target on the top side to get to and through if we can get above that level and start moving away from these two 100-bar moving averages. Then the buyers would likely see more probing to the upside with the high prices that we saw in trading last week, last Friday, I should say, and the 50% retracement as the next key targets on the top side for this currency pair to increase bullish bias. Conversely, on the downside, it would take a move now back below the 100-bar moving average on the 4-hour chart to open up door for a move back toward the 200-hour moving average at 1.26263. Get below that level, and this swing area down through here with a number of different swing lows and swing highs forming either support or resistance would be the next key target. Note that not yesterday, but the day before on Monday, the price came down toward the high of that swing area, found support buyers pushed to the upside. So if we're going to go lower, we need to get below not only the 200-hour moving average, but also get below the swing area to open the door for further downside momentum. So that's my technical look at three of the major currency pairs to kickstart your trading day for this December 4th trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.